Okay, the statement of retained earnings. This is brand new this year. You guys have not done this before, and it ties in with the stockholders' equity. That's why we have to do statement of retained earnings. And if you remember from your vocabulary, retained earnings are the stockholders' equity after dividends have been paid out. Okay, so basically we know that the difference between revenues and expenses is our net income or net loss. And then the business or the owners get to keep whatever is left of that net income or net loss after the dividends have been paid out. Okay, and that is what is known as our retained earnings. Okay, it's what we get to keep retained. All right, so using the income statement for, let's just say Chickadee Travel Service, prepare a retained earnings statement for the year ended April 30th, 2012. Adam Cellini, the owner, invested an additional $50,000 in the business in exchange for capital stock, and dividends of $30,000 were paid during the year. Retained earnings were $30,000 on May 1st, 2011, the beginning of the current year. Okay, so here we go. So we have the Chickadee, the name of the company, retained earnings statement, and then for the year ended April 30th, 2012. All right, so this is done yearly, and we start with last year's retained earnings, which we know from our information on the side there is $30,000. And again, everything is formatted for you. We then plug in this year's net income or net loss, and for this year we have a net income. And this is why the income statement must be done before the retained earnings statement, because you need that information. And this year's net income is $55,550. You're then going to back out any dividends that were paid. And if we look at our reading over here, we know that there were $30,000 of dividends paid. And we will then calculate our increase in retained earnings. Now you can have a decrease in retained earnings. That's if your net income, your dividends were greater than your net income, or if you had a net loss, you might end up with a decrease in retained earnings. But for this example, we have an increase in retained earnings. And so to figure out the increase, we take the net income for the year and we back out any of the dividends that were paid. And we find that we have an increase in retained earnings of $25,550. And then to calculate retained earnings for this year, we simply take last year's retained earnings and we add it in. We add this year's increase in. Because remember, retained earnings just kind of builds on each other, the company's value, what it's worth. And we find that our retained earnings for April 30th, 2012 is $5,550. Now, you might look at this and go, oh, the retained earnings is equal to the net income. It's not always like that. It just happens to be for this example that the two tie in together. It's usually not going to be that way. It's just the numbers that they gave us here. Okay? So that is your retained earnings statement.